Guys, Max Convexity. Hope everyone's having a great day. This is the third time I've tried to do this video. For some reason, I'm having problems with the audio or with one thing or another. Okay, let's look. Well, all of these funds are 100% profit right now. Let's look at the market. Well, one thing to look at, let's look at Tesla while it's up. Here's Tesla, and here's the two strikes they have sold for covered calls. And both of their strikes are not in any danger of going in the money. The broader market is blowing up right now, even though it has pulled back a little bit in the past hour. It's just on fire. Here's the chart for NASDAQ. So this is what triple QY trades. These traders trade this, and it's well above the max profit. On SPX, we have two ways to trade it now with Defiance funds. They have JEPY, where you can, where you can invest in JEPY. And the way JEPY managers make money is they sell a put, and in the money put, to and then pay you a dividend with it, which is a great idea. The problem with that strategy is it totally caps your upside over the, it caps your upside 100% over the strike of the put. The other strategy, that's the other way you can play this with Defiance, is called the SPY T. And this red box, I drew it and kind of exaggerated it out here. It's not really a profit box, but this represents where their spread is. The bottom line is the strike they sold. The top line is the strike they bought. But actually, the top line, if the market lands right on the top line, it's actually kind of the worst case scenario for the SPY T fund. And they still make money, and the fund's still up money on the day. But that it's like the least good scenario that could occur. The SPY T wants higher prices, and they want it higher than this top line. If it goes to the top line, that's kind of their break even, basically. That's the worst case scenario, for them in any event. So, but no, the SPY T is doing great today, and JEPY is doing great. Thing is, JEPY pays a lot more, so you just have to decide for yourself if the extra risk is worth it. You get paid more to have your upside totally capped than to have it partially capped. So SPY T, I mean, there it is, points earned. You're earning, this is how many points you're earning for SPY T. Whereas JEPY's options they sell, we can look. It depends on what day it is. Today, JEPY's options, they sold over 28 points, but that was just after yesterday's bloodbath. Usually I'd say their options they sell are worth 10 to 15. So you make, twice as much as you do when you make the deal to totally cap your upside. And that's what you do when you sell an in the money put. It's that your upside is capped above that strike price of the in the money put. Well, SPY T is just a good compromise, but you make less income. So you just have to decide for yourself if the trade-off's worth it. Okay, I had a good question today from Sonia, and she was saying, so did we make money yesterday or something? I think what she meant is, or here's the way I'm taking it. But no, yesterday was a bloodbath, and it caused us to lose money yesterday. But as a result of yesterday, the volatility went way up today, and it'll probably be up Monday and Tuesday also. It might be up for a couple of days, and we'll make more on the ensuing days. It's never good news when you have a big drop in the market, but the one thing it'll do is it'll cause a tick up in volatility, And these capture volatility, these funds on a daily basis. They're the only ones that capture it on a daily basis, them and also Watch Hill. Right? Yeah. And the other ones captured on a weekly and monthly basis, which is a fine way to do it as well. But yes, these ones that do it on a daily basis that reprice every day, and there's a big shock to the market like yesterday that's in the market for a couple of days, they realize those gains, and where funds that use monthly options don't realize those gains. There's a trade-off though. There's sometimes they have to realize losses that funds that use monthly options don't have to realize. It's not like a one-way street. It's an extra risk, that they get an extra reward for. But anyway, all of these funds are just killing it today, including SPY T. Because SPY T wants the market to be up as high as possible. SPY T would rather not have a moderate up day, even though it's all right. That's where its strategy would sacrifice the most to the broader market. On a down day, SPY T strategy looks golden, because on a down day, anything down at all, SPY T's spread makes money. It's 100% profitable. So that's just extra money in your pocket. That's 6 points or whatever it is, just money in your pocket. Same thing with JEPY, except JEPY makes like 15 points. Any kind of down day, it's money in your pocket. It's just the up days where they have to pay, where there's an opportunity cost where they have to pay. All right, I'm going to try to pull up some NVIDIA. I think NVIDIA's covered calls are safe at this point. NVIDIA and a bunch of these pulled back so hard yesterday. For a while, Tesla had some calls and they were in the money, but then the market pulled back and they aren't in the money. Last time I checked. I guess this just isn't going to cooperate. I really didn't care about NVIDIA anyway. Let me see Tesla. Tesla has two tranches, some at 185 and some at 175, I think. Maybe 172.50 and 182.50, something like that. Anyway, trying to pull them up. We had a pretty vicious pullback this morning from, 171 or so to 165. So now these options, I believe, do not expire till next week. So, but in any event, they're doing what they should do. Looking good. Maybe let's check out MSTR if the Wi-Fi will cooperate. It's pulling back. I mean, this stock really didn't even go with the pop up in the market. It had one green bar and then it just started going down. Well, anyway, the good news is all their option positions should be a max profit. They have quite a freaking ladder right there. All right, I guess we can try the buffer report. On the weekly, the prices are going to be wrong. All right. One day on the single stocks. Let's look at this. All right, one day on the NASDAQ indexes. You can see when the indexes are up this much, none of the yield funds should be outperforming, because this is where they give up something. And sure enough, they're all giving up a little bit. That's what we'd expect. Looks like JetQ and QDTE and IQQQ on a relative basis are performing the best, but the rest of them are doing their job. They're getting about half to 3/4 of the upside, just like these funds do, depending on which one it is. Some are doing a little better, but where's my phone? Anyway, the standout ones are are definitely JEPQ, QDTE, and IQQQ. All right, I'm going to sign off. You guys have a good one.